there are two reasons for Bitcoin price to change. One is supply and demand, right? If there's excess demand for limited supply, price will rise. The other is the devaluation of the currency. People ask all the time, well, what's the ultimate end game? Well, let's just think about it. Bitcoin today is digital gold. So 6 trillion, that's 5x from here, in the bank. Making 5 times your money from here, in the bank. You can call me on it, okay? So that's like 400K. Easy. I mean, like super easy.
Bitcoin, the world's largest asset by market cap, staged a price recovery on Monday, reaching nearly $73,000 per coin before settling below $71,000. This brief rally, which saw Bitcoin surge from just over $65,000 to around $73,000 per coin, marked a significant 12% increase for the leading crypto asset. It's important to note that this rally occurred despite continued GBTC outflows, while the sell-off is expected to impact Bitcoin prices for a few more weeks. Bitcoin investors are eagerly anticipating another significant positive that will help the other spot Bitcoin ETFs conveniently offset the GBTC outflows. Several spot Bitcoin ETF issuers, including ARK Invest's Cathie Wood and Bitwise has Matt Haugen, have discussed the imminent approval of spot Bitcoin ETFs by warehouses. Both Cathie and Matt have described this as the next wave of inflows from the ETFs, a development they believe will be more significant than anything we've seen so far. Last week, a crypto enthusiast with the username AP_Abacus shared on his X account that at least 2 major investment banks are competing to be the first warehouse to add the products. His post reads, "The launch of spot Bitcoin ETFs in the United States has fueled rivalry between investment banks over which will be the first wirehouse to add the products. Morgan Stanley is hoping to beat UBS and becoming the first wirehouse to fully approve the Bitcoin ETF. Morgan Stanley may announce a few days before UBS. It's interesting that global banks are talking about Bitcoin ETFs as a race." Senior Bloomberg ETF analyst Eric Powell Tunis responded to Andrew's post, elucidating what's happening with the wirehouses. His comment reads, "I heard from solid sources that none of them have added the Bitcoin ETFs. They are still in the holding pattern, playing a compliance game of chicken, waiting for one of them to go first and then give the rest cover. So it will probably be an all-at-once moment. When that is, though, is the question. This all-at-once moment will be the next big wave for the spot Bitcoin ETFs and the underlying crypto asset, as it will give access to tens of thousands of investors who can still not buy the ETFs." During a recent interview with Crypto Blood, Morgan Creek Capital's Mark Yusko shared his views on Bitcoin ETFs, the bull market, and when we can expect to top in this cycle.
I actually never felt that the ETF was for the big institution, right? It doesn't mean that they wouldn't use it, but ETF
it's a
for
retail.
me,
It's a retail product.
yeah, it's for the individual investor, and really what it was for was not the Robinhood crowd and not the meme coin traders and the day traders. It was for, again, it's a boomer wrapper. It's for the boomers whose money has been kind of abdicated to a financial advisor, and the financial advisor works at one of these big platforms, UBS, Merrill Lynch, etc. And that total dollars is about 30 odd trillion. It's a lot. And I kept saying that, look, once the ETF was approved, at a bare minimum, right away, 10 basis points was going in. So that's, about $30 billion. And we've had about half of that so far. And so that's pretty amazing. Now, 10 basis points is not where it's going to stay, because Fidelity already said 1 to 3% in their kind of fund of funds ETF that allocates to other ETFs. They said 1 to 3. And I think all these other places are going to say, 1%, that's a good number. That's a good diversifier. Well, 1% of 30 trillion is 300 billion. That's more money than has ever gone into Bitcoin since day one.
Yep.
Just let that sink in for a second. 300 billion is more fiat than has ever been converted into Bitcoin. And yes, Bitcoin's market cap today is 1.3 trillion, but 1.3 trillion didn't go in. It was a very small fraction of that, somewhere in the 200 something billion dollars, and the rest is appreciation. What's going to happen, in my opinion, is the halving is going to occur. The fair value is going to increase because that's what happens when the halving occurs. The fair value goes up because the price needs to adjust to support the miners. Now, in this cycle, the fair value probably doesn't go up as much as previous cycles because we have this pre-halving event of the ETF, which boosted the price closer to fair value so that most of the miners are doing okay right now. But the fair value is probably going to go up to, call it, 75-ish K would be my estimate. In a normal cycle, then the leverage comes in and it pushes that to 2.3, 2.4 times. Well, there's not as much leverage now because, they got rid of CZ at Binance, so that's not as much leverage. And they got rid of some of the old bad actors in terms of the leveraged lenders. So let's say we only go up 2 times fair value this time. So we go to 150-ish. Okay. Well, then what happened? Well, then when you're so far above fair value, that's when the short sellers are come in and some of the people say, okay, that's good enough for me. I'll take a little profit. I don't think the cyclicality's gone. I don't think this is number go up in a straight line. I think we're going to have peaks and we're going to have troughs. And for a while, we're going to make higher highs and higher lows. That's called accumulation, right? So there's going to be an accumulation over the next year or so. Then when it gets too highly priced, there'll be distribution. The smart money, the people who bought early, or some of the whales, will start to distribute to the masses. And then when it falls, they buy back.
Though Mark has spoken far ahead to the next bear market, which he expects will begin in late 2025, we are still very early into the cycle. The only reason it doesn't particularly feel so is because the ETFs temporarily disturbed the flow of a typical Bitcoin bull market, and halving year, this is the first halving year that Bitcoin has hit a new all-time high before the halving event. In previous cycles that always occurred after the halving. Plus, even more disruptions are expected in the coming months, especially after the all-at-once wirehouses moment. Eric Bell-Tunis predicts, if it happens, especially after GBTC outflows have finally trickled to a stop, we're going to see a massive surge in Bitcoin prices, a surge that can potentially cause more positive disruptions in the cycle. Brad Garlinghouse, the CEO of Ripple Labs, is just as bullish on the cryptocurrency market as Mark Yusko. During a recent interview with CNBC, the Ripple CEO discussed his outlook for the cryptocurrency market in 2024, stating that he expects the overall crypto market cap to double before the year ends. He said, "I've been around this industry for a long time, and I've seen these trends come and go. I'm very optimistic. I think the macro trends and the big picture things like the ETFs are driving real institutional money for the first time. You're seeing that drives demand, and at the same time demand is increasing, supply is decreasing. It doesn't take an economics major to tell you what happens when supply contracts and demand expands." He optimistically added that the overall crypto market cap would easily double by the end of this year, going from the current $2.64 trillion to over $5 trillion. What are your thoughts on Mark Yusko's interview and Brad Garlinghouse' optimistic $5 trillion prediction for the crypto market in 2024? Please drop your thoughts, comments, and observations in the comment section below. Also ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.